Welcome back, passive income investors alike, to today's video where I'm going to show you the impossible, because I'm a full-time magician and I want to, not that that relates, but predicting the future. I just want to talk to you guys about something that not a lot of people understand, but it is a reality of life. It's a reality of the stock market, and you can absolutely make a lot of money simply by predicting the future. And it's really simple, and it has a lot to do with what I call cause and effect. Jump right into it. Welcome back, passive income investors alike. Today I'm going to show you the impossible, because I am a magician. Not that that helps in predicting the future, but I want to talk to you about how you're going to be able to predict the future and how you're going to use these tools to try and make yourself money. And this is actually how you should be making most of your stock picking decisions, depending on whether you're buying dividend stocks or growth stocks. I'm going to give you a few examples of something that I call cause and effect. At a very young age, when I realized that you could predict the future, it was like a mind-blowing thing to me. And you're probably thinking to yourself, well, who taught you how to read the future? How do you figure that out as like a kid or a teenager? And unfortunately, it had unfortunate circumstances around it. But I had some good friends that became bad friends. I went from being a good person to what I'm going to call being a bad person. And luckily, I had some older influences in my life. When I was a teenager, I live in a small town, and drugs are very prevalent. Drugs are everywhere. And this gentleman that I met looked at me, looked at my friends, looked at kind of my circumstance, and said, "Look, buddy, there's two things that are going to happen to you. You're going to go down this road, which is a path, or you're going to go down this road or this path, and you're going to have to pick one of these directions." But he's like, "If I'm going to tell you, I've been down the road you're in right now, and if you keep going down this path, these are going to be the end results." So he's like, maybe you want to look at doing something else or going down this path with your life. And I looked at it, and that's when I started kind of like gearing away toward my friends, and I couldn't believe what would have came into fruition. One of my best friends ended up committing suicide. I haven't seen my two other friends since then, and they were going through depression. This led me down a road of just mind-boggling insanity, but it led me to the understanding of cause and effect. If you do something today, it's going to ripple through space-time reality, and it's going to affect the future. If you are a fat kid where your mom is shoving food down your mouth and fattening you up, I guarantee you the three things that are most likely going to kill you most top of the list, probably a heart attack, a stroke, or even diabetes or something along that line, which means as an investor, you're going to ask yourself, can I make money off that? Which sounds really cruel and wrong, but this is how cause and effect in predicting the future works. It's a very bad example, mind you, but you could say, well, there's a lot of fat people in the US. They're going to need extra medical care. What companies specifically deal with heart attacks and maybe tools or operating systems that they need to buy? Let's find those companies. Let's buy into those companies. People are very poor with their health. That is what I call cause and effect in predicting the future. So I've given you two examples, but I want to give you an example of where I actually apply this to the stock market and where I made more money than I have ever made on a single trade, I'm going to say. Mind you, this didn't happen overnight, but we're going to go back in time because a lot of you new subscribers don't know this story, so I'm just going to break it down very briefly. I want to talk about Canopy Growth Corp, the largest marijuana company on the planet. And I remember when Trudeau first got elected here in Canada, and one of his promises, and one of the reasons he even got elected, was because he wanted to legalize marijuana. And as a brand new investor, I was like, you know what are the best opportunities today? What is going to be the best return on my capital today? And I'm trying to think, and you have to stick in your realm of competence, because the only way you're going to predict the future is if you actually understand what is going on. And I knew, because of my drug-addled past, I understood how popular marijuana was, especially in Canada here. And Trudeau was going to come in and legalize it. So I looked at the companies. I said, what are the companies that currently exist? Well, there was not a lot. There was like two or three. Had a Freya, Canopy, and ACB. Maybe just a couple others. These companies were super tiny at this time because we're going back quite a bit. And essentially, I remember Canopy was trading around $3 a share, and I started loading up on it. It was actually one of the first stocks I ever bought because I saw this escapade coming sometime in the future where all of a sudden weed was going to be legal and these companies were going to be exploding. So I'm like, you know what? $3 a share. People thought they were expensive. Penny stocks. Actually, it was a penny stock at this time. It traded on the OTC markets, which is the trash market. But I started loading up, and the stock, sure enough, jumped up to like $10, $12. And this was still years ago, and I sold out of it. I made a couple grand. was really proud of myself. But we're still in the early days of legalization, and legalization hasn't even happened yet, mind you. And I realized I still wanted to be a part of this. I felt like the wave hasn't come in yet. And you know what? I bought back in. I bought 1,000 shares at $8. Within not even a few, I think it was like 3 to 6 months after that, the stock went from, it was like 12, 10, $8, whatever. It went from there all the way up to 20, 30, 40, 50, and it kept going. I started selling off in the high 20s and the low 30s because, again, I don't know where it's going. I just saw this wave coming. I captured it. It took 3 years from the time I started buying to the time I fully sold out of my position. I made roughly $22,000 in profit, and I felt like a cocky, arrogant stock market investor like most people do when they make money. Now, this doesn't happen all the time. Most of the time, we're looking at companies that are paying dividend yields, something like 4 to 6%. When we're playing dividend stocks and we're looking at the dividends, we can only presume that we're going to make a 4 or whatever the yield is going into the future. So if you're looking for high growth companies, guys, if you're buying a company like Apple, you not only should you be able to understand how that company's making money, you have to understand how they're going to grow into the future and where you might end up. I could have never predicted that Canopy was going to go to $60 a share, or I would have still been holding on to it today. I just knew cause and effect. I knew marijuana is a huge thing illegally, and it's going to be legal. So why not try and get into the companies that are going to be selling it to the illegal market as early as possible? Cause and effect, 3 years later, whoop, a ton of money, right? It's kind of interesting how that works. And you can do this on many different levels. But again, it comes down to how much you understand of what is going on in those circumstances. Because if you don't understand it, you're not going to understand the cause that's going to lead to the effect. Leads me down to the last thing, guys. This dividend channel that I focus on, the stock market channel, is about my passive income journey and how I'm going to hit financial freedom and retirement. Hopefully by the time I'm 35 is what I'm pushing for. But in the next 3 to 5 years, I'm trying to get my accounts up to making me over $1,000 a month in dividends. I am more or less a dividend investor. And you're probably thinking, well, how do you predict that future? How do you know you're going to be making $1,000 a month? So this is the same thing. It's like if I told you I was going to be making $1,000 a month 3 to 5 years from now, whether I lift a finger or not, a lot of people are like, well, how do you know that? Maybe you might get lucky and you could pull that off. And it's like, no, I understand how a compound bloody calculator works. If I'm investing around $1,500 a month over a year, guys, you're looking at more than $15,000 invested over 3 years. You know, you're looking at about, you're looking at about $50,000 that I'm just going to be contributing over the next 3 years. And then on top of that, you're going to have the growth of my dividends sitting at 4.7% already. And if I get any growth on top of that out of my growth stocks like Apple, Microsoft, etc., that I'll leverage down and reinvest into higher dividend yielding stocks. I add all the math up, guys, and using a compound calculator starting at 100,000, 110,000 I already have invested, you know, you end up sitting around 175 to 225, 250. I'm talking about grand here, 250 grand, depending on the fluctuations. I leave a large gap because 175 to 180,000 will be the lowest end. That'll be if I just collect my dividends and I keep adding about 15,000 to my stock portfolio a year. Now, if the stocks do well and they rally up and everything goes hunky-dory, I could end up somewhere around $250,000 invest. I'm going to say moderately around 230, 250. The stock market does really well over the next 3 years. I keep investing consistently and I get those dividends on top of it. And if you reinvest 200, and so let's just take 200 as an even market, say 6%, 200,000 at 6% dividend yield. If you're buying REITs, utilities, and things that pay higher yields, you're going to end up with about $12,000 every 100 grand, 6%, 6,000 times 2, $12,000 a year, and that's going to be divided out into 12 months is $1,000 a month. That is how easy it is to predict the future, guys. Cause and effect. What are you doing today that you know if it continues over time, you're going to get a crazy, awesome result that you're going to be able to predict and gauge into the future? Now, let's use Tesla as an example. Tesla's my worst performing position ever, and you have to understand when you buy volatile stocks, you're buying them on literally the assumption of cause and effect. So let me give you the last example here, guys. I promise, last example of predicting the future. So a company like Tesla, okay? A lot of people don't like Tesla because of their fundamentals, but if you look at their goals, their passion, and how they're trying to change the future, they're trying to do something today that's going to lead them down this path that's going to get them into the future of insanity, where they're going to be a dominant automaker. And they're proving today, right now today, they're the number one EV. They're just an incredible company, right? What they're doing today. The problem is they're spending so much money to predict the future that it's making them look really poor today, but if they can continue down this path that they are laying for themselves, and this is where risk comes in, guys, because essentially we know where Tesla wants to be, we know where they're going, and if they can get there, the company could easily be worth anywhere from $2,000 to $4,000 a share. But for them to get there, there has to be the least amount of hiccups along the way as possible, and this is what we define as risk. Essentially, a company lays out a plan. If you think they can pull that plan off, the question is how many things can go wrong along the way? Is there going to be regulation? Is there going to be this? Is there going to be that? The more hiccups there can be along the way, the more risk there's going to be in the stock, and the more volatile that stock is going to be. And Tesla is probably bar none the best investment for a company trying to predict the future. Now, if you're not looking for that kind of risk, pick simpler companies, guys. Companies you can understand, like Procter & Gamble, McDonald's, companies you know today is bringing in cash income. You know people are still going to need to eat. Or maybe if you're into real estate, if you buy an area and you look it up online that there's tenants, all the rental units are rented out in this entire town, and there's new malls and there's new buildings and offices going up, maybe you could get a rental unit, and you can predict in the future there's going to be more people needing places to rent. So if I own something to rent, there's a good chance I could rent it out. McDonald's, go to McDonald's. Everyone needs to eat McDonald's, so we can presume that in the future people are still going to be eating McDonald's, but we can understand, because that's such a predictable future, that the rate of return is a lot lower. The more predictable that future is, the lower rate of return you're going to get, guys, and the less volatility you're going to experience. The whole market is actually based on future projections. It's a fascinating thing, and it's something that I hope open your mind up a little bit to today. It's something that will make you rich, but try and, again, stick in your world of competence. You have to understand what the cause and effects are, guys, to get to the results that you want to achieve in any kind of portfolio. So I hope you guys enjoyed this. Stay cool. It's been a fun video that I made today. I really enjoyed making this video for you guys. It's something really interesting. I think it's a fun topic, and you learned a lot about me and dividend and stock investing in general. So stay cool. Stay awesome, guys. I look forward to chatting to you real soon.